Thank you all for joining us. We're going to give 2 more minutes for others to join as well. Bear with us. Right. Good morning, good afternoon. Welcome to today's Kepler webinar on biofuels. We'll have time for questions and answers at the end, so please type in your questions in the Q&A box as we go along, and this session is being recorded. Beata, if you could pass, thank you. In case you haven't been following the Kepler Insights team very actively covering the volatile markets, know that we have a team of 50 plus experts covering a huge breadth and depth across commodity markets, from refined products, oil, dry bulk, agriculture, LNG, and natural gas, providing a cross-market perspective to our clients to understand price movements and supply shifts. Today's webinar will be on biofuel markets and the structural shift they're facing. There are several developments driving this transformation. I'm pleased to introduce my colleague Beata Wojtkowska. She looks after the biofuel research at Kepler. She brings experience from the biofuels, agriculture, and petroleum industry, giving a unique perspective to understand today's dynamic markets. Without further ado, Beata, over to you.
Thank you very much. Good afternoon and good morning. Today I will want to talk to you about the growing demand in EU for the biofuels and primarily for HVO and SAF. And also we'll touch about the UK market and growing the reliance on the import side, which is not only in HVO, and also explaining why we believe the flow from the US will continue to come to Europe as the blending slows down in 2025 there, but we are still ahead of proposed new RVO increase. But let me start with a question here. I know a webinar is not a way of question and answer. It's you asking the questions. But I wanted to start with this graph. These two graphs show the demand for biofuels in 2024. Two different geographies. At first look, they look the same, about 17 to 18 million tons in total. But if you take a closer look, you can notice that one is more heavy in HVO share and the other one is in FAME. So here's the question: can you tell which one is Europe and which one is the US? You can probably propose your question, your answers, but let me do it for you. Yes, Europe is the one that is, for the time being, still heavy in FAME, while the share of HVO has grown significantly in the US. So let's start with the US picture, with the European picture. 2025 has brought significant growth of the demand, as you can see in the chart on the left, due to primarily growing mandates in road fuels, but also in marine and SAF. SAF demand growth is modest, but still significant for this type of the market. Bunkering is happening mainly in FAME, and significant share is in Asia being used, but some of the HVO volumes are also going into the marine in Europe. The most of the growth is still happening in HVO, and this is due to a couple of reasons. First is that road fuel mandates are growing above the allowed diesel norm of max 7% of volume of FAME. For example, in France, we have 9.4% mandate in diesel and the limited possibilities of limited double counting use. And there are also countries that are introducing specific mandates for pure biofuels, like, for example, Italy. And this is supporting the use of HVO because HVO is gaining better acceptance among the users compared to FAME, which has had its limitations in terms of quality when used as P100 versus HVO 100 is it's except for one parameter is virtually the diesel. And if we see on the chart on the right, the significant mandate increase is observed primarily in Northwest Europe. I mean, there is Black Sea mentioned. You cannot see because it's tiny, but the potential is there still to grow. Now, let me focus a little bit on the Northwest Europe and on the case of Germany, because Germany was the country that was primarily responded for the growth of HVO demand in 2025 due to the regulation change that happened last year with pausing the possibility of using the old years tickets, which basically forced the blenders to blend maximum volume up to the limits, up to the mandatory demand. Now, what recently has happened in Germany as well is that they published a proposal of the legislation for 2026 onwards, which is part of the introduction of the RED3 regulation. However, they impose very strict rules, which are at this stage are not stimulating in my view, the growth of demand, and this is why there is a ban on and end of double counting of advanced biofuels, which normally you would think that it should bring simply more volumes, bigger demand overall for physical barrels. However, they also ban use of POMI as a feedstock, which is the primary feedstock used as advanced, and it has brought a lot of concerns and possible fraud accusations recently. Germany is also planning to ban the use of tallow category 3. And also with existing tight limits on crop usage that are lower than in other countries in Europe, and the limit on 9B, which is UCO primarily, there are very limited possibilities of how Germany can meet the growing mandate in 2026. but we shall see, because the development in the advanced waste feedstocks is growing. So maybe there will be also some amendments to the current proposal. But coming back to the European picture overall, in spite of the continuous investments, new capacity coming on stream, production is not growing in line with the growing demand, and the imports, heavy competition from imports, is one of the reasons behind it. Neste has huge plant in Singapore, which stands out thanks to the scale of its facility. So it means basically lower unit costs and higher possibility of competition. Additionally, the recent legislation changes in the US has made the US market less attractive for Singapore production, which means that they are turning right now the barrels to Europe largely. And the US exporters continue to send the barrels overseas to Europe. 2026, though, may bring more relief to margins and possibly increase the production in Europe, because the demand in picture in the US will change. But I will speak about it a little bit more on later slides. And one of the reasons why the HVO was primarily winning in Europe over FEM is basically the costs, competitiveness, and the economics. As you can see, apart from the while the acceptance of physical barrels, there was also a lowering value of premium between HVO and FEM, as you can see in 2024, which was basically due to the growth of exports overall and lowering demand as well. And as you can see, the spike on the price is also a signal that too big dependence on the imports is not good, because it happened when there was some production issues at one of the exporters' facilities, and this caused some supply disruptions to the market. And UK is a perfect example of a country that is turning into importer of biofuels, and where the economics are really winning. Because UK, when leaving European Union, decided not to impose the anti-dumping duties on the US HVO in particular, not seeing it as a threat to the local production. What happened? The decision was taken in 2022, and you can see that since then the share of HVO has grown significantly in the UK, and FAME blending has dropped by over 50%. Currently, there is an ongoing investigation of UK Trade Remedies Authority on the imports of HVO from the US. However, we all know what has recently been announced on the negotiations on the trade deal between UK and the US proposal that suggested removing duties on 1.1 million tons of US ethanol going into the UK, and which is exactly matching the volume that is being used in the UK for to meet road fuel mandates. So, in view of this trade deal still being negotiated, and the approach probably not to impose any additional duties on US products, I think that the decision of the British government could be not to impose any anti-dumping duties on US HVO, and the imports could continue. So in future, we could see much bigger share of HVO, even more than we have right now, because the current margin structure in the UK is not allowing really the British producers to perform, and some of them has been already slowing down or closing the plants. Let's take now a closer look at SAF, where the disconnection between the production and the demand is even more visible. There had been several investments in Europe into SAF processing. However, they have not been able to run because, as you can see on the chart on the bottom right, the value between SAF and HVO has been since launch of the new mandate in January this year has been negative, and so not covering the full cost. So the producers are mainly turning into HVO, not running on SAF volumes, and the main culprit was basically the imports, significant imports from Singapore, but also from China that recently opened new facility. We just heard the announcement, and growing exports from the US. So let's take the turn right now to the US picture. Last 2 years has shown significant increase of the HVO demand exceeding FAME. And this was for partially similar reasons as in Europe, as the higher blending rate allowed for HVO, and this which made a perfect fit with rising Californian mandates. And also because HVO generates, at least for now, more RINs than FAME. So it was simply more beneficial and better economy. And also because of the size of the plants in the US that are much bigger than biodiesel plants, and due to economy of scale, they can run better and lower unit cost. However, what we see in 2025 is the notable drop in overall biofuel demand. And this is particularly visible on the chart on the right, where you have RIN generated per product monthly volumes, and the decline is directly tied up to the expiration of the blenders tax credit. This was $1 a gallon until December last year, which was turned into producer tax credit. And however, the value of this producer's tax credit is much lower. And the market, and it's not covering the costs for some of the biodiesel producers. The market was also faced the growing the excess of RINs generated in the previous years, because there had been over the mandates due to the economic allowing significant imports. And so 2025 is showing us the decrease of the demand. However, as recently announced, 2026 will bring a significant increase, over 30%, thanks to the new RFS proposal. And as you can see in the chart on the right, it's that the HVO production in the US has been growing significantly and partially in line with the demand. However, the gap has happened last year to a certain extent due to rising exports from Singapore. And the blenders tax credit that was available for the importers. This year, we predict that there will be much smaller imports because the tax credit is not available for the importers. However, there are still some economics that allow part of the volume from Singapore being shipped to California. This may change in the new regulation as of 2026. But this is also for why Singapore has turned into Europe with their volumes. And the lower demand overall in California is also making the US producers more eager to look for exports. And I will show it on the next slide. So as you can see, the exports we predict that they will continue from the US for SVR because the demand in the US is lower, especially in California, which is also facing the oversupply of tickets. And running for exports partially is also allowing the producers to follow the better capacity utilization and lowering the unit cost of production. And albeit they cannot claim the producer's tax credit for imported UCO, but they don't pay the import duties when running for exports because many of them are running in duty-free zone. And right now, I think what we will also see is the growth of SAF exports from the US because the producer's tax credit is higher on SAF than for renewable diesel. And as you can see, there was a shift in values. Running for different markets in California and in Europe. That is one of the reasons why the European market is right now more attractive than Californian one. And one last point on HVR growth, because one of the reasons that the production of HVR in the US was able to grow that much was basically the rising imports of waste oils. A collection of UCO grew worldwide, and in the meantime, Europe has limited the further increase of use. Running on tallow and UCO is giving lower carbon intensity scores and more credits in the states like California. The imported waste feedstocks can be used more freely in HVO units located mainly close to the ports. So the biodiesel farm producers in the US cannot really much benefit from it as they are located more inland. And I think that when you want to predict what will further happen to the export flows from the US, is basically visible on the UCO imports because, as you can see, everyone was expecting that as of January when there was announced that imported UCO will not qualify for the producer's tax credit. Everyone thought that it will not be imported, but it is continuing, except for April when there was the stall because of the announcements of the import duties for Chinese production, for the Chinese imports in the US. However, they regained and still continue. The US players, the producers are still buying UCO in China. And this is basically to run for the European market. And going forward, basically, this is what you can see, and I think you can easily track it on Kepler. as we see, we see the rise of exports of SAF, and I think it will keep on growing, and to a certain extent, the volumes of HVO will also keep on growing. So to sum up, we have covered the growth of EU demand and the UK turning into a pure biofuel importer, maybe in 100% in future. And while the US demand is easing right now, we predict that it will increase next year. Thank you.
Thank you, Beata. Thank you, everyone. Beata, there are a few questions about HVO. How do we determine the EU production? And secondly, how will the rise in US obligations impact the export of HVO to Europe? Any thoughts on those?
Sorry, can you repeat, because I
First one,
in my mode I cannot see the question. Sorry.
problem. The first one is how do you determine EU HVO production? And the second one is how will the rise in US obligation impact export of HVO to Europe? So the production in Europe on the one hand, how we establish it, and secondly, how we expect that transatlantic trade to evolve as a result of these obligations.
Right, thank you. So basically, the work on the S&D that I'm performing is focusing not only on the demand but also on the supply, and I'm looking at the production of all the biofuels in Europe. I agree that HVO is quite difficult because we don't have any official stats for it, except for some countries that are preparing or publishing the statistics historically. But I do run my analysis from bottom-up approach, looking at each of the plants in particular, looking at the production, at the margins, at the import of feedstocks, looking for any information that these companies are sharing publicly, and talking also to the market about any potential disruptions or any changes or shifts that might happen. And what was the second question?
The rise in US obligation, what's going to be the impact on HVO exports to Europe?
That's a good one. I think that the exports of HVO itself would drop. However, I believe that the SAF exports will continue, because currently we don't have anti-dumping duties for SAF, for US SAF in Europe. There are talks that it might change. However, the overall approach of European Commission is not to impose any import duties on SAF. There was also a decision on not imposing anti-dumping duties on Chinese SAF. So I think until we have a development in the and build up significant volumes in Europe, the Commission will not want to stop any imports.
Clear. There's another question. Won't exports in US fall this year in anticipation of higher mandates to generate RINs to carry over the next year to meet higher demand?
Yeah, that could happen as well, but I believe that currently, if they have a margin, they will try to run for all of the markets. There is something I haven't mentioned, that it's hanging on the current year blending and potentially next year. It is the small refiners exemptions that no decision has yet been taken on how much demand we will lose because of that.
Thank you. And we have other questions. So, do you have early estimates of how the draft DE German RED 3 proposal will impact feedstocks availability? How much more demand of other available feedstocks can we expect?
Mm. No, I don't have this.
Um, we have also a question on renewable diesel. Do you think there is US renewable diesel that stays in EU 27 or just transitions to the UK? Same question and for SAF.
Can you repeat the question?
Do you think there is US renewable diesel that stays in EU 27 or it's just transitioning to UK? Same
Oh yeah,
question.
you're asking because at Kepler we are showing the flows that are coming to Netherlands and Belgium. So yes, I believe this is transshipment to the UK, and same for SAF at this moment. Yeah.
Clear.
Because UK right now, if you're looking at if you're looking at the SAF demand and SAF mandates, UK has the biggest share of SAF, but it's also due to the fact that UK is one of the biggest countries of jet users in Europe.
Thank you, Beata. I believe you answered all of the questions. Thank you. Thank you
Thank
for
you.
insightful presentation. Thanks for everyone for the participations. So we'll be sharing the material with the participants. If you'd like to discuss any of these topics further, contact us, research@kepler.com, and keep an eye for the next webinars. We are organizing plenty at the moment, and we look forward to speaking with you soon. Thanks a lot, everyone.